Hi everyone, welcome back to Corporate Decoder. Today we're digging into Fidelity D&D Bancorp's latest report, and let's just say things are heating up or maybe cooling down depending on how you look at it, and we'll break down exactly what that means for you. So we're looking at a filing from July 23rd, 2025 that talks about their performance up to June 30th of the same year. This is essentially a check-in on how the company is doing financially, and they've issued a press release to go along with it, which is what this report is mainly relaying to us. Fidelity D&D Bancorp keeps things pretty consistent. They are a Pennsylvania-based company and their common stock trades on the Nasdaq stock market under the ticker symbol FDBC. Nothing too surprising there, but it's good to know who we're even talking about. The real meat of this filing, as you'd expect from a current report like this, is all about their results of operations and overall financial health. They put out a press release on July 23rd to share how they did for the quarter and the year up to June 30th, 2025. And as is standard practice, they've attached that press release as Exhibit 99.1. It's like getting the company's public statement directly, and we're going to see what's really in it. Now let's get to the nitty-gritty, the numbers. While this report itself doesn't contain detailed tables within it, it's referencing a press release with those crucial financial details. This means we're getting confirmation of how they performed, and we can infer what those numbers in the press release likely represent for people invested in their common stock. Think of it this way. When a company like Fidelity D&D Bancorp releases a press release about their earnings, they're usually highlighting the good stuff. So while we don't have the raw financial tables here to dissect directly, the fact that they are reporting their results signifies they have financial performance to discuss and share. For banks like Fidelity D&D Bancorp, this usually means talking about things like net interest income, how much they're earning from loans minus what they pay on deposits, and their provision for credit losses, which is money set aside for loans they think might not get paid back. What we'd typically be looking for is how these key figures have changed compared to previous periods. Is their net interest income growing? That would generally be a positive sign indicating they're effectively managing their lending and deposit activities. On the flip side, if their provision for credit losses is increasing significantly, it could signal concerns about the quality of their loan portfolio, perhaps due to economic downturns or specific industry weaknesses. For instance, if we saw a hypothetical situation where net interest income was up, say, 5%, that's a decent steady increase, but if their provision for credit losses jumped by 20%, that's cause for a closer look. A 20% increase in loan loss provisions could mean that for every 5 loans they're worried about, they're now expecting to lose 1, which definitely warrants attention from investors. We'd also be looking at things like efficiency ratios, which tell us how well they're controlling their operating expenses, and return on equity, a measure of how effectively they're using shareholder money to generate profits. A declining efficiency ratio or a shrinking return on equity could indicate that the company isn't managing its resources as well as it could be. The context for a bank like Fidelity D&D Bancorp is also important. Are interest rates rising or falling? How is the overall economy doing, especially in their local markets in Pennsylvania? Are their competitors doing better or worse? For example, if the Federal Reserve is raising interest rates, that can be good for a bank's net interest income, but it can also increase the risk of borrowers defaulting. Based on this report stating they've issued a press release for their results, we can assume they've shared these kinds of crucial figures. The fact that they are reporting means they have numbers to report. Without the actual press release content here, it's like trying to judge a book by its cover, but we know the cover is the official results for the quarter and year to date. Signing off on this report is Salvatore R. DeFrancesco Jr., who holds the important roles of Treasurer and Chief Financial Officer. This is the person ultimately responsible for the numbers and the financial narrative the company presents. His signature here validates that they've officially submitted this information. So what's my take on this filing generally speaking? Well, this Form 8K, specifically this item 2.02, is all about announcing new material information, in this case financial results. It's a standard procedure for companies, but it's the content of that press release that truly matters. The fact that they've issued one means they have financial performance to share. And that performance is what investors, analysts, and we here at Corporate Decoder will be dissecting. The strength of a bank like Fidelity D&D Bancorp often lies in its ability to prudently manage risk, maintain a strong loan portfolio, and adapt to changing economic conditions like interest rate environments. Their direction will be dictated by how well they do these things. There are always risks for banks, of course. Economic downturns can increase loan defaults. Regulatory changes can impact profitability and competition from other financial institutions, including fintech companies, is ever present. Opportunities might come from strategic acquisitions, expansion into new markets, or the development of innovative financial products. Ultimately, you have to look at the actual numbers released in that press release. Are they growing profits? Are bad loans under control? Is that capital strong enough to weather storms? That's the real story. Without those numbers here, this filing is just the announcement that the story has been told elsewhere. Alright, that's our quick decode of this SEC filing. Remember, the real insights come from the financial details in that press release they referenced. What do you think are the most important things to look for in a bank's earnings report? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community. The link is in the description for even more discussion. Thanks for watching, and I'll see you in the next decode.